Welcome to the Deep Dive. We're cutting right into the corporate earthquake that has been Unity software ticker U. For years, this company was kind of the silent foundation powering mobile gaming, right?
Absolutely. The engine behind so much.
But the past 2 years brought, well, chaos, mistrust, and massive stock volatility. Just yesterday, though, their Q3 2025 earnings dropped, and honestly, they seem to be signaling a huge turning point we need to unpack.
It's fascinating, isn't it? Because Unity is, fundamentally crucial infrastructure for real-time 3D content. But they almost torched investor trust through a whole series of, let's call them operational missteps.
Yeah.
So we're looking at a platform that really moved far beyond gaming, into film, architecture, advanced simulation, and how it's attempting a complete corporate and technological reset.
Okay, so the mission today is understanding how this turnaround is happening, and it seems to be driven by this ruthless focus on their two core pillars, create solutions and grow solutions.
Exactly. That's the core of the strategy now.
Okay, let's maybe start at the beginning because you mentioned they are crucial infrastructure. Most people probably know Unity now, but they weren't always an engine company, were they? It's
Yeah.
kind of a classic pivot story born from failure.
That's absolutely right. It started way back 2004 Copenhagen as over-the-edge entertainment.
Over the edge entertainment, okay.
Yeah, and they spent about a year developing their first game, Gooball, launched in 2005, and, well, it's a commercial flop, didn't go anywhere. But the founders, David Helgeson, Nicholas Francis, Joachim Ante, they had this aha moment. They realized the tools they built to make the game were actually way more valuable than the game itself.
Right. So the company that now powers, what is it, like 70% of the top mobile games globally?
Yeah.
It was founded because their first game failed.
Yeah.
And that led to the pivot to democratize game development.
Precisely. And that mission, that accessibility focus, it was perfectly timed for the smartphone revolution. Remember the iPhone launch?
Yep.
Unity supported it early and fully. While their big competitors were still focused on, large console games, Unity just cornered the mobile market. And
Right.
today, like you said, their engine is deployed everywhere, over 20 platforms. Windows, Mac, iOS, Android, PlayStation, Xbox.
And beyond gaming too, right? You mentioned architecture.
Oh yeah, heavily used in automotive design, architectural visualization, film production. They really are everywhere.
Okay, so they built this dominant position. Then came the volatility cycle. For
Yeah.
you, the listener, who might have only glanced at the headlines, 2023 and 2024 were just defined by corporate chaos at Unity.
It was, frankly, an operational nightmare. The crisis really kicked off in September 2023. That's when they introduced the infamous Unity runtime fee.
The runtime fee, I remember that.
Yeah, this policy suggesting they'd charge developers based on game installs. The backlash from the developer community was, well, it was immediate and visceral. Just pure outrage.
A crisis of trust feels like an understatement. What was the tangible cost beyond the stock price just tanking? Did developers actually leave, go to Unreal or Godot?
The cost was massive, both tangible and intangible. The intangible, loss of developer loyalty, that's everything in this business. The tangible cost led directly to the CEO, John Ricciello, departing just the next month, October 2023. Then came the operational cleanup, multiple large-scale workforce reductions,
All right, delay.
including a massive 25% cut. That was 1,800 jobs in January 2024. And the cost of that, the company spent $205 million in incremental costs in just the 9 months ending September 30, 2024, purely on employee separation, restructuring,
Wow.
all while the stock price collapsed, like over 60% in the year leading up to May 2024. It was bad.
Okay, that sets the stage perfectly for where they are now. A high-potential company trying this drastic cleanup, both inside and out. So after that chaos, the new management's first job seems to be ruthlessly simplifying, focusing on these two areas for stability and growth. So let's define the business today. How does Unity actually make money through those two pillars?
Right. They are structurally kind of two distinct businesses running on the same tech platform. The first is Create Solutions.
Okay, create solutions first. This is the engine everyone knows.
Exactly. Create Solutions is the platform utility. It provides the core tools, the actual engine for developers to build that real-time 2D and 3D content we talked about.
How do they charge for that?
It's primarily subscription-based, Unity Plus, Pro, Enterprise tiers. But importantly, it's free for smaller companies until they hit a certain threshold over $100,000 in revenue or funding.
Okay.
Historically, this pillar, Create, it accounted for about 38% of total revenue back around mid-2020. It's the foundation. It builds the content, the user base.
Got it. And the second pillar, the money-making machine, as you called it, used to be Operate Solutions, but now they're calling it Grow Solutions. We should be clear about that name change.
Precisely. Grow Solutions. This is the growth and monetization engine, and this is where the majority of the revenue generation happens, historically around 62%.
62%, so it's significantly larger.
Yeah. It provides tools for customers to, grow, engage, run, and ultimately monetize the content they built with the Create engine.
So things like ads.
Exactly. Includes the Unity ad network, Multiplay for game hosting, Vivox for in-game communications. The revenue model here is largely revenue share. Unity takes a cut of the ad serving via its unified auction platform, or it's usage-based for their cloud services. Essentially, they're leveraging the huge reach of the Endis to run a powerful advertising network.
And that strategy seems to be showing some signs of strength again. Looking at the latest numbers, as of September 30, 2025, they had 338 customers spending over $100,000 a year with them.
Yep.
That's up from 12,242 the year before. So their biggest clients are actually increasing their spending.
It absolutely shows stabilization and, crucially, growth in their core enterprise relationships, which, takes us directly to these explosive Q3 2025 financial results that just came out.
Right. Let's get to the numbers that seem to have caused the stock surge yesterday. The report was, a monumental beat, especially on the bottom line. Revenue came in at $470.6 million. That's up 5.4% year over year. Okay, decent.
Decent, yeah.
But the profitability metric, that's the jaw dropper. Unity reported non-GAAP EPS of $0.20.
20 cents. They didn't just beat estimates. They swung from a projected loss to a significant profit. Analysts were expecting a loss of negative 24 cents per share.
Wow.
That's a 44-cent swing per share. How is that even possible for a company supposedly still in cleanup mode?
That swing really is the definition of the inflection point we mentioned at the start. Looking at the segments, Create Solutions revenue was stable, $152 million, up 3% year over year. Okay, but the driver was Grow Solutions revenue. That hit $318 million, up 6% year over year. So the monetization side accelerated.
Now, we need to address the critical nuance here for investors. There's still a GAAP net loss of $126.8 million.
Right. So how can they report this massive adjusted profit but still have a huge GAAP loss? What's going on there?
Okay, the key is that this loss was significantly impacted by an accounting change. Unity shortened the useful lives of certain intangible assets related to that big WOTA acquisition back in 2021.
The Lord of the Rings visual effects company.
That's the one. So shortening those asset lives increased the amortization expense in the quarter by a substantial $39 million. That accounting move added roughly $30 million to the GAAP net loss right there.
Okay, so the core business engine. If you strip out these restructuring and accounting costs from past decisions, it's now demonstrably profitable. But they are taking the necessary accounting medicine, so to speak.
Exactly. The profitability looks organic, and the big GAAP loss is more procedural, dealing with past acquisitions and that restructuring. We also have to look at their key operating metrics, which really point towards sustained health now.
Like what?
The dollar-based net expansion rate, that's the metric measuring how much existing customers are spending compared to last year. It hit 103% as of September 30, 2025.
103%. Okay, what was it before?
That's up dramatically from just 94% the previous year.
Wow, okay, so going from shrinking spend to growing spend among existing customers. That 103% DBNER isn't just growth. It feels like a huge vote of confidence, doesn't it?
Totally.
Especially after the developer community felt so burned by those earlier policy changes. This signals that the paying customers, the big ones, aren't just sticking around, but are actually expanding their reliance on Unity's products again, particularly the monetization tools, presumably.
It's the clearest sign that trust is being rebuilt, at least with their most valuable clients. And furthermore, their liquidity looks really solid.
cash flow.
Yeah, they reported robust free cash flow of $151 million just for the quarter. That brings their year-to-date free cash flow to over $285 million. They're sitting on $1.9 billion in cash now.
That's a nice cushion.
It provides a huge buffer, especially when you consider they have about $2.23 billion in outstanding convertible notes. So the balance sheet looks much healthier.
Okay, so what actually drove that performance in the Growth Solutions segment? If the engine side, Create, was just steady, something dramatic must have changed on the monetization side to get that profitability swing and the DBNER jump.
The primary catalyst is clear, and it's really the centerpiece of their whole cleanup strategy. It's AI.
AI, yeah.
The Q3 results were specifically reported, like in the press release, as being powered by Unity Vector AI. That's their new, sophisticated AI-powered advertising product.
Vector AI.
This AI is the operational correction. It leverages Unity's massive proprietary trove of user data, about all that information gathered from powering 70% of the top mobile games.
Yeah, that's a lot to eat.
To significantly improve user acquisition accuracy and efficiency for their clients, the advertisers.
Okay, so better targeting, better results for advertisers using Unity's network, driven by AI. That makes sense. And that lines up with the management changes designed to undo the chaos, right? We saw the new CEO, Matthew Bromberg, former Zynga COO, appointed back in May 2024.
Yep, he's the one overseeing this big pivot towards AI-powered monetization.
And culturally, are things changing internally?
Well, culturally, the company claims it is aggressively undoing so many of the missteps and moving towards a place of transparency and clarity. Now, whether that's fully happening on the ground is always hard to tell from outside. But it signals that the leadership, at least publicly, is serious about recovering developer trust while simultaneously pushing this powerful new AI tech to accelerate revenue growth. Vector AI isn't just, a shiny new product. It's the mechanism for turning years of that proprietary data into reliable profit. It proves the company can actually effectively monetize its dominance.
So analysts are now forecasting this AI catalyst, Vector AI, to lead Unity back to double-digit percentage growth in 2026.
That's the expectation now, yeah. Driven by Vector and these new investments and solutions within their focused strategic portfolio, basically the core engine and monetization businesses.
And beyond the immediate financial turnaround, what does this new focus on AI and that strategic portfolio mean for their long-term position? Are they still just a game engine company?
It means they are leveraging that foundational technology to aim, I think, far beyond just video games. Look at their partnerships across every major hardware platform: Apple, Google, Samsung, Sony, Microsoft. They're everywhere. Right. Unity seems to be strategically positioning itself as the foundational content management system, the CMS, for the next wave of the internet. The whole XR ecosystem, AR, VR.
The metaverse, if you will.
If you will, yeah. They're taking their dominance in 3D content creation and leveraging it with this AI-powered data monetization to become, potentially, foundational infrastructure for interactive, real-time content across all industries, not just gaming.
That really feels like the real story here, doesn't it? Unity, leveraging its deep historical roots and market dominance on the Create side, the engine, feeding that massive user base and data into cutting-edge AI on the Grow side via Vector. And it translates that historical volatility into sudden, demonstrable profitability.
Indeed. The profitability signal is loud and clear now that the financial engine, Vector AI, seems to be performing. So the core question for you, the listener, to maybe mull over for 2026 isn't just about gaming growth. It's about which specific major industrial application they are best set up to disrupt next. I mean, considering the scale of Unity's R&D focus on real-time simulation and their powerful data moat, is Unity strategically positioning itself to make its biggest impact first in, say, highly regulated simulation markets, like autonomous driving systems, or maybe advanced engineering and manufacturing visualization? They seem to have the tools, and now the cash flow, to choose where to apply that power most effectively. Where do they go next?